Steve filled you with a lot of numbers. Let's look at some more. Let's take a live look at the big board on Wall Street as we continue healthy, wealthy, and wise. The Dow is currently up 68 points there at 23,501. It opened this morning in positive territory, and as you see, it is still in the green there. So is the S&P 500, NASDAQ as well. Hopefully, it'll be a nice, slow, steady climb for a Monday. And here on this healthy, wealthy, and wise Monday to tell us if it's time to take some action is Jack Lansing from UBS Financial Services. Jack, good morning. Thank you for being here.
Thanks for having me.
As in the past, usually when you're here, it's a good sign that we're in the green right. For go. So we'll keep that going. But what a roller coaster ride in December. That was nuts. Based on history, what should investors maybe start preparing for this year?
Well, I think one of the things investors should ask, the big question in everybody's mind, are we heading into a recession in 2019? Right. And I would say UBS, in a word, no. That is not our outlook for the economy. I'm kind of reminded of Mark Twain when he said, the news of my demise has been exaggerated. We saw the very strong numbers that were coming out on Friday. Right. So we don't see that happening in the course of 2019.
You know, people are still very shaky from 08, but this is a very different time, and the economy seems to be good. It's not in this major fluctuation, though the numbers on Wall Street just keep on going up and down. So it rattles people.
Yeah, you know? Definitely.
But it is very different, though. I mean, the way that things are going. All right, so people naturally are scared. Should investors be pulling money out of stocks?
We actually feel the opposite. We had a view about a month ago encouraging investors to put a little bit back into the stock market. And right now, with all this volatility, stocks are a lot cheaper than they were a year ago.
So it's like buying on sale in essence.
Well, it is buying on sale, and our view is for a longer-term investor, this is probably a really good opportunity point to get into the market if you've been on the sidelines. Not recommending you try to trade this, don't misunderstand what I'm saying, but it's probably a very good entry point for the long-term investors here.
Okay, and that's the same whether it's an individual stock or whether it's mutual funds.
Could be mutual funds,
retirement.
Yep, and whether it's your 401k, but exposure to equity markets probably a good entry point.
Get in there and buy on sale. Don't try to time the market. I mean, you know, in essence, you'll end up on the wrong side of that if you try to do that.
Well, we always say you have to be correct twice to do that. So it's better just take a long-term view. Remember, a lot of people, this is 30-year money that you're talking about investing here.
All right. So what can we do now to bring some safety into our savings?
There's a few things that if you were wise enough to have diversification in bonds, they've been your friend. The bond market's been very solid really all the way through December into January, so that should certainly be a component of your portfolio. And then there's other alternative investments that we're recommending people consider right now. There are investments that are social investments, so that's an area to look at. These are long-term. These are companies that practice good environmental, social governance practices, and also apply them to solving real problems like obesity, cancer, long-term themes. It's a way of staying in the markets, but truly thinking this is a 5-year portfolio. Right.
And that's a slow, steady gainer, which is what I think most people are looking for.
It takes it away from the volatility. It's like, okay, as long as you believe that these are responsible corporations dealing with major issues, this over time will be a good place to be investing.
Sometimes it's tough to stay the course, you know, but I guess now is the time to stay the course and continue to look forward to better things ahead.
Definitely.
Because I mean, last year we started off great and then boom, it tanked.
Right. Well, I think we've talked about it before. The market hates uncertainty. And there is a lot of uncertainty out there right now. You can look in any direction. I think we're feeling a little bit of that. But some of the issues that we're concerned about, the trade situation with China seems to be improving. The Fed's being accommodative, the words from them now, that seems to be improving. So I think some of these headwinds are starting to disappear. We'll see corporate earnings start in about a week and a half. And that should give us a sense of direction.
Fingers crossed. Thank you so much. All right, always good to see you.